Hi, this is Daniel, and you're watching Unrivaled Investing, a no-hype, mission-focused channel trying to find you exceptional companies and unrivaled investments. Today, we are talking about HIMS stock. Regular viewers might remember that I actually covered it in detail back when it was de-SPACing, originally Oaktree Acquisition Corp. And so if you want to know the full detail on their business model, check out that video. And I also in full disclosure, I did call it out to my Unrivaled Investing Journey subscribers a couple of times. Called it out twice as a potential multi-bagger, and that's part of my deal with Unrivaled Investing is each month I try to call out a potential multi-bagger. I called it out once via the stock, calling out the stock as an opportunity, potential opportunity, and another time as the warrants. The warrants, I ultimately bought both for myself. The warrants made about a 7x return for myself, while the stock I sold from prices up about 50 to 120% higher than what I called out over the next year. And I closed out of the position in the low 20s. And the reason why I did that was because I looked at the valuation framework, and this is the reason why I think valuation is so important, is that I said, even if I sort of run a aggressive scenario, even if I look at my high side, I just didn't feel like the 5-year time frame was that compelling. You know, I was looking at 35% growth on the high side, 30% optimized margins. And keep in mind, this business is nowhere near that. They're unprofitable now. And I assumed a 30 times multiple 5 years out. I effectively got to break even with more conservative assumptions getting to down significantly from around the $22 share price. So at that point, I said, you know what? I think investors are just getting bullish a little too. They're getting a little over their skis here. I think the valuation just didn't quite warrant it based on the results. And honestly, I think that's sort of came to pass as the stock is down about 70% since then. It's below my original cost basis, and folks are now wondering, well, wait a second, Daniel, you were buying this around $10 a share. Should I be getting back in? And sort of what's their update since then? Because this stock has just been brutally beaten up since that $22 price that I was selling at. And so the reality is, as I look at what HIMS is doing as a business, this is the reason why it's so important to separate out business fundamentals versus stock price. And I'm looking at HIMS as, ignore the stock price for a second, but they're posting very strong growth. They're beating expectations. They are raising guidance. And those are the things that I like to see. I mean, you don't see this a lot with SPACs where they sort of say, oh yeah, this is what we expect to do, and then they crush it. And that's exactly what HIMS has done. Looking at effectively 70% growth for this year, 2021, 75% growth in the second quarter 2021 in terms of online revenue, 70% in total revenue. And they're growing through a bunch of new categories like dermatology, behavioral health, as well as making really smart strategic acquisitions like Apostrophe, which help increase their position in dermatology, along with really clever celeb endorsements like Miley Cyrus and J-Lo. I think that helps flesh out their For Hers brands because historically, I think their real strong suit was the HIMS branding. Now they're sort of saying, hey, we want to cover everyone, along with sort of their expectation to continue targeting and rolling out international markets in the near future. So I look at this and I'm saying, wow, they're really executing. They have a lot of new markets to tap into, and they have a lot of new categories that they're succeeding in, like behavioral health. And I'd argue the stock is even potentially cheap. Now looking around the $7 share price, baking in a range of different potential assumptions. You can lay it out yourself. You can pencil it out yourself. I'm now assuming 20 to 25% optimized margins. Think about future growth rate of 20 to 35%. Keep in mind, they're posting very strong growth this year, around 70%, give or take. And so I'm effectively saying maybe downside of 16%, maybe upside of over 200%. So that does seem like asymmetric risk reward. The challenge here is that it really depends on the stickiness of their customers and their long-term margins. Do you think that they will be able to achieve those margins longer term? They are spending a lot of money on marketing to sort of get the growth that they're doing. What does this business look like without that marketing spend? Are the customers as sticky? Will they keep, showing up and buying this branded prescription treatments? And Wall Street, I'd argue, is also a little nervous about the increasing competition from the big boys. You see Optum sort of launching, trying to step on their sneakers, saying, hey, we're going to offer pretty much an identical solution. Say, hey, yeah, we welcome you through telehealth, and then sell you all these goods at very reasonable prices. And that is, honestly, that model eats right into what HIMS is doing where HIMS is trying to brand all the prescriptions, and they're saying, yeah, we're not going to try to rebrand all these prescriptions. We're just going to try to eat this whole thing. And so that does face a real competitive threat. I'd argue that HIMS faces. That said, they'd argue, look, this is a multi-trillion-dollar market, and this is, overall a net plus for consumers. So, you could argue maybe the pie is big enough that the road is wide enough for multiple players to succeed. That's how I'd argue a bull would frame this. If you want to know my plans in terms of what am I planning on doing, go to unrivaledinvesting.com. And this video is just sort of doing a quick recap of where we're at, how I think about the current valuation. Is it cheap? What do I think about the business? Have they executed? Why is the stock low? That was really the purpose of this video, sort of doing a quick catch up terms of my own personal journey with HIMS and where I think it stands currently. Definitely think it has the potential to be cheap. There are just some aspects to it that I'm still thinking it over, such as the stickiness of customers and whether or not they can actually get to those margins. I'll probably talk about that in our exclusive Discord later tonight, just so that Journey subscribers can hear about it. If this video has been helpful for you, please make a point of hitting that subscribe button, hit that thumbs up. Thanks so much for watching.